There's been a lot of talk about oil this past week, volume reaching new highs, the price going negative, and also a production cut coming in May. Does this mean we've hit the bottom? Hey, it's John at Real John Doe from Currency.com, bringing you another video. I thought I'd switch it up and end the week off with an oil market update, since it's been one of the most traded products we've had this week. In this video, let's go over the things that caused the oil price to collapse and got everyone's attention. We'll have a look at the daily and the weekly chart to see if this is the long-term bottom and the prices to watch for when the world goes back to normal. Take a second here. Hit the like, subscribe button, even turn on notifications because we will have videos like this coming out weekly. So with oil prices going negative, some traders were a little bit confused why the broker they use does not have negative oil prices. This is because the oil futures for May was the one that went negative. Most brokers offer June futures for oil, and that's the one that we're going to be looking at. Here's the crude oil chart on the Currency.com platform. A quick recap here. You can see at the beginning of the month, we started at 22.41, right above that Hall moving average. We went for that resistance at $33. It got rejected, and now we're below that Hall moving average and trending down ever since. When the price went negative this week, we've had two of the biggest daily drops so far this month. Monday being close to 11% drop, and Tuesday a 30% drop. Past 2 days, we've had a reversal trending up, with the current price today, Thursday, ranging at around $18. If you look at the chart since the last recession, oil has not been looking good. We've been having lower lows and lower highs. I believe this is because the world is going more eco-friendly and the demand for oil is starting to slow down. The COVID-19 pandemic this year has had a big impact on the oil demand. People are not traveling. Businesses are closed. We're not buying as much fuel because we can't really drive anywhere. And a lot of the oil is being put away in storage. Included with the price war between Saudi and Russia, this all had a snowball effect and caused a collapse in the oil price. Traders have been jumping in on the opportunity, seeing what they can make out of this price action. There's lots of profit to be made, but also lots of risk. Something that can help to manage your risk, keep your position sizes small, and also don't FOMO into a trade when you see it moving fast in one direction. We have some days when we're up 10% and then some days when we're down 10%. And that can leave traders caught, chopped up in positions and lose money. So with production cuts coming in May and a possible peak in coronavirus cases, some countries are starting to think of reopening. Was this the bottom for oil price? Or is there still more fear and lower prices in weeks to come? So let's jump in the platform, have a look, because right now this is possibly the lowest the price will be for the next 10 to maybe 20 years. So on the 1 week chart here, something you can keep an eye on. If you see here long term, you can see that each time oil did have these major lows, it bounced quite a bit off that. If history repeats itself, you can expect the same thing to happen again. If this is a bottom, then I would expect to see potentially another bounce up and even test this resistance right up here. So zoom in here a little on the weekly chart. One thing I want to point out is the price gap that we currently have. We have one here on this week. The last gap we've had was back here back in April 2017. Those gaps eventually got filled. So if that also is the case, and right now this gap that we have will get filled, which would bring us to around $25 for oil. The MACD right now is coming closer together, which is a good sign to show a bottom. But as you can see here, also in 2015, the same thing happened. The MACD came closer together. It crossed, and then the price hit a resistance and made another new low right around here. So you can't always look at that to see where the bottom is. It kind of shows you the momentum. But if you look at the RSI, the RSI is extremely oversold. There hasn't been a lot of times over the years that the RSI for oil has been oversold, about 4 times here. And the last time we did have the RSI down oversold like this was back in 2015, where it did bounce a little bit and find a new low about 6 months after. So with the RSI being this much oversold and the MACD starting to cool down, we are potentially finding a bottom price in this range. But that can also change like how it happened in 2015. As you can see here in 2015, the RSI was also oversold. The MACD cooled down and crossed, but the price action went up, it reversed, continued its way down, and found a new low at around $30. One quick thing, we are below that Hall moving average line, which is serving as a resistance right now. And if we were to make it above that, then you can expect us to attempt this gap fill here at about $24. It's hard to know which way the trend is going based on only that whole moving average. But most traders would either use that as a stop loss from a short that they're in, or potentially a stop loss for a long position once we do cross it. If this is the long-term bottom for the next few years, the prices I'm going to keep an eye on is see how we break out of these zones like here. Those have served as 3 supports, so when we do have a reversal to make it back up, they will serve now as a resistance. So here on a daily chart, looking back about 1 year, you can see the RSI was oversold past few days, but it's now sitting at about 35. It is a good sign for a reversal, and also the MACD, same situation right there. It did have a bearish cross a few days ago, but the MACD line and the signal line are starting to come close together again, and that's also a good sign for a reversal. Price action seems to be moving to that first fib line that we're going to go take on, and then potentially fill that gap that we have around that $24 price range. If we do go to that range and continue up, then we would head for this next fib line here at around $30 and see if we can break out of this trend line and continue our ways up. If we do go for this gap fill and fill the gap and this zone gets rejected, we would need this $10 range to hold. If that does not hold, then 100% we are seeing new lows for oil. And that will be coming into May and June when the expected production cuts are coming. Also when countries are expected to start opening up. We might see the demand slow down even more in weeks to come due to the coronavirus. So we could reject that first fib line and continue our ways down and find a new low. Probably around $5, and then that's where I would be a buyer. We do have a lot of momentum about to cross this whole moving average, but there is a lot of uncertainty right now in the market. Like I said earlier, we have those days when we're down 10%, next day we're up another 10%, and then the next day we're down another 10%. And that can also be the case that happens here. Short term, it's really hard to say which way this trend is going. A lot of traders trading very small time frames like the 1 hour, 5 minutes. You will get chopped up, but at the daily here, you can clearly see we're trending down and currently having that $10 range as a support. So if you are trying to catch the bottom on this price action, it'd be best to keep your eyes very close on the chart and pay attention to the news. The markets are very volatile right now, so scaling your position would be best, or even better, to sit on the sidelines and not trade. So that's it for this market update on oil. Thanks for tuning in. We'll have way more videos to come and trading videos. It's John at Real John Doe from Currency.com.